The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 25th, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something we must master each and every day. So let's begin our day with a few empowering beliefs out here. You know, there are those who have little and give it all. These are the believers in life, and the bounty of life and their coffers are never empty. Something to think about. When we learn to give thanks, folks, we are learning to concentrate not on the bad things, but on the good things in our lives. And it's Thanksgiving weekend. Well, Thanksgiving, that's not the weekend yet. We're just beginning the week. But you know what I mean out there. Be thankful for the smallest thing, and you'll be worthy to receive something even greater. The more we give, the more we have left, folks. And lastly, change your mind and change your life. Let's go check out the changing conditions in the marketplace here. Right now, the Dow is up 12 points. The S&P is flat, trading out at 1804. Composite down 2 points, trading at 39.89. Russell 2000 off about about $1.70, trading out at 11.23. Apple's up $5 and change. We'll go check in on that. Microsoft up 23 cents. Google up $5. Leading the charge to the upside is Apple, led by Google, then Biogen, BIIB, just right behind them. Sears Holdings up $4.55. Cubist Pharmaceuticals up $4. DaVita Healthcare up $3.74. Amazon up $3.47. Voxeljet up $2. Camtech up $2. Goldman Sachs up about $2. Caterpillar up $1.77 out there. Our call-in number is 877-927-6648. If you give us a call, folks, would be happy to take a look at your stock chart, anything you'd like. Lead the charts to the downside. You've got Pioneer Natural Resources, PXD is its ticker symbol. They're off about $9 here this morning. LinkedIn down $4.70. Continental Resources off $4 and change. Kihu 360 Technology off $4. Regenerate Pharmaceuticals down $2. ADT Corp off $4 out here. If we just begin by taking a look at the let's look at the ES Mini here. Let's look at the 30-minute chart out here, and let's take a look at what it is doing. Now, last night, as the futures opened, they're really coming in at the 6:30 time frame. Nice little sign of strength, getting us into the overbought condition. That condition really was worked off last night just simply by moving sideways. A little bit of pressure here this morning to be expected, just simply because as I pull this chart off to the side, we watch the Euro Japanese yen here get into the extreme overbought condition as well early in the morning, right around 1 o'clock or so. We can see that is pulling back, but soon it'll get towards a sold condition at that stage there. We ought to see the market start to chug along higher. Now, we have not seen the ES Mini get all the way back to the breakout area, which would be the low of that 6:30 session. That came in at a price of 1800. The actual price, 1801 even, Steven out here. Let's take a look at retracements off of the most recent set of swing points out here. We'll use this low from 1:30 a.m., 1792, up to the high that was put in at 10 o'clock in the evening on November 24th. That was last night out at 1809. We'll see that so far just a dead cat bounce, a .382 retracement off of that level as it's worked off that bought condition out there. So no big deal, no great shakes out here on the retracement thus far. 1798, that would not be a problem as well. Pulling back to that area, that would be your .618 retracement level. So long as the ES Mini doesn't break through 1794.50, it's a long and strong all of the way out there. Break 1794.50, and we're going to have to stop and take a look at what other damage might be done to the stock charts out here. So at this stage here of the morning, just really a normal pullback. Could pull back a bit further, maybe another 4 points, 3 to 4 points. It depends on what happens between the euro-yen currency pair as well. If we take a look at the little longer-term picture, let's go from a 30-minute chart to a 120-minute chart out here on the ES. The ES this shows it's got an A to B equals CD up. That, quite frankly, takes price to about the 1820 level. Right now it's trading out at 1803. So, and you can see on the 120-minute chart, it too is has been in the overbought condition. Of course, any type of breakout above this candle here that took place at 8 p.m. This is a 2-hour session here last night. That's a high is 1809.25. That'll be so long as the low is not taken out at 1801. That'll be a momentum move to the upside, a version of a rising three candle formation out there on the 120-minute chart for the ES Mini. Let's go take a look at the actual indexes, see what we have going on here. Let's start off by taking a look at the actual S&P 500. S&P 500 here last week closing out its session at its highs, 1804.84, above resistance, which was this key reversal session from November 18th. Bearish or bear sash candle out there. November 18th, that high was 1802.33. 1802.33 should become support. So far, the pullback this morning, 1803.89. So the S&P 500 has room to run on the upside, both on the daily, on the weekly chart out here. Actually says that this might want to move up to about the 1850 type area out here. If we take a look at different A to B equals CD patterns, let's do that. Let's start off with our low on June 24th, come up to our high on August 2nd, then pull back down into the August 30th area. The 1 to 1.272, which is the next target level, that's 1817 inside of the inside of the S&P 500. If we get above that, I would say the 1850, 1870 level becomes its next target on that A to B equals CD. If we take a look at, and that's really probably the best A to B equals CD pattern that is out there. But let's take a look at another one. Let's look at the one coming off of the lows here on August 28th, all the way up to the high on September 19th, and a pullback into October 9th. You can see the 1 to 1.618 takes us to about the 1812 mark. We've been up to a high of 1808. So you've also got the black diagonal lines on my screen. Those are the rising price channel lines taking you all the way back into 2009, folks. So it takes you into 2009 out here, and that says that price, you can see here back in the time frame of April in 2010, price got above that level. So for price to get above that area, that's fine. Price is rising, so that's not doesn't mean anything other than just simply prices continue. That doesn't mean that it has to be a barrier, I guess is really my point out there. That does not necessarily have to be a barrier in the marketplace. Let's go take a look at the Dow, see what the Dow is doing. The lead dog out here, Dow's up 28 points right now. The Dow wants to trade all the way up to that 16,670-ish, 660 area. It wants to make that 1,000-point move of that consolidation pattern that was in place since May of 2013. So this is the leader out here in the market, and it just simply wants higher price. No resistance established here inside of the Dow that we need to be paying attention to. The last form of resistance took place on November the 7th when we had a little key reversal, bearish engulfing candle. It means the top of that, 15,797, should be your level of support inside of the Dow. That is on the daily chart. Let's take a look at the Russell 2000. Russell 2000 on Friday closing above its reversal area, key reversal session, I should say. That was from October 30th. Of course, you try saying key reversal session 3 times in a row real fast. Well, maybe you can do it better than I can. But October 30th, that is the number you're paying attention to, 11/23/26. The actual close on Friday was 11/24/92 out there. Close above resistance. Now that area is being tested again here this morning, but there really is that 11/23/26 is the number here, 11/23/86 so far. We've been down to 11/23/10 out here. That should hold as a support level. Old resistance should become new support. That is on the Russell 2000. Let's take a look at the NASDAQ Composite out here. NASDAQ Composite not closing. Did it close above its reversal area? It did not. On the daily chart, that's the November 18th area. The high there is 33.94.97. Today, a close above 33.94.97. All indexes will have taken out any of their resistance areas. Right now you're trading at 33.90.96, but a close again above 39.94.97. And all resistance areas on the daily charts will have been taken out, and just gives the freedom for price to keep moving higher out here. So that is on the composite. Inside the NDX 100, the NDX 100, it needs to close above its high from November 18th. That's its key reversal session. That level, 34.2920. So we got two laggards out here, the composite and the NDX 100. The numbers to be paying attention to there inside the NDX are 34.2920 or 34.2453. It closed today above that area, and all of the reversal, all of the resistance zones will have been taken out inside of the markets across the board. Let's go check out the ETFs out here, the ETF structures. Let's take a look at the Dow Diamonds. If we take a look at Friday's action, up with volume of 4.4 million shares, taking out a last swing point that had 5.2 million shares. So volume-wise, not really too bad out here. The Diamonds want to go ahead and make that move up to about the 165-ish, 166 range out here. So no real resistance at all inside of the Dow Diamonds. And support, if we were going to take a look at an area for support out here, you'd come all the way back to the session of November 7th, and that area would be 157.80. If it gets below 157.80, that could spell trouble in River City out here, because then it would have said that this would have been a false breakout. But right now, let's just read it for what it's worth, and what it's worth is it wants higher price. If we take a look at the SPYs out here, the SPYs here closing out the session on Friday at 180.81 at its or near its session high. The actual high was 180.83. It closed above its level of resistance, which was November 18th, 180.50. That's the number to keep an eye on. We're trading at 180.82 today. So that level should hold as support. 180.50 again is the number inside of the SPY. Where does it want to travel to? Well, if we take a look at the A to B equals CD patterns out here, let's first get rid of retracement areas. And we'll just come off of the this A to B. Let's take the one off of June 24th, just like we did on the actual index. And the let's just change that to red. So the next stop for the SPY is 182.43. That's your 1.272 A to B equals CD. If I do take a look at the primary trading range boundary lines inside of the SPYs here, you're going to see on the monthly chart it is up and over. It's trading right into about the midpoint level right now on the monthly chart, but more likely it wants to get all the way up into about the 190-ish range here on the monthly chart for the SPYs as we take a look at their primary trading range boundary lines. If we take a look at the weekly, you can see the weekly is already above that midpoint level out here. That says that it wants to move up into about the 188-ish type range. You can see on the weekly chart, very bullish looking candle configuration out here. No reason for price not to run higher. Dow's up 22. S&P is flat, trading out at 1805 right now. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow's up about 25 points right now, and lead the charge to the downside inside the Dow is Boeing. BA is a ticker symbol, off about $3.50 right now. IBM is off about $2. It's trading out at $179.50. Chevron's off 30 cents. That's trading at $123.73. To the upside, you got Caterpillar. Caterpillar is, we'll go take a look at that, but that's actually a bearish-looking stock chart, I believe. McDonald's is up 84 cents out here. Walmart's up 58 cents. 3M is up about 60 cents right now. Let's go finish off the ETF. So let's take a look at the. I can't recall if we looked at the Qs. If we did, I apologize. We'll do it again here. Now the Qs here on Friday. What they're trying to do today is they're trying to tackle the key reversal bearish engulfing session from November 18th. The high is 82.98. There, your trade. I'm sorry. The high is. Let me make sure I've got this right. I'm looking at the low. The high is 84.11. You're trading at 84.08 right now. You didn't close above it on Friday, or not you, but the Qs themselves. They did not close above that level on Friday. That is where we'll see everything in alignment as far as a breakout is concerned, with the Qs closing above its resistance here. And again, that number is 84.11. You're trading at 84.08 right now. If, in fact, the Qs close above that level, where will they travel to? That's a really good question. Let's take a look at the A to B equals CD pattern coming off of that June 24th low up to the high here inside the Qs on August the 13th. Now, really no real retracement down there. So it says that 85.24 would be a likely target area. Right now they're trading at 84.05. The key is going to be whether or not it closes today, tomorrow, whenever it is, above 84.11. It's only area of resistance inside the marketplace. Let's take a look at the last ETF structure. That would be the IWM out here. Again, the IWM closed above resistance here, closed above all resistance. Number one, had a little doji candle on October the 29th, followed up with some leaves falling off that tree, a little bearish engulfing candle that engulfed the prior, 2, 4, 6, 8 sessions out there. So very strong area of reversal inside of the IWM. The high of that October 29th session is 111.62. Closed above that. You're trading at 111.76 right now, by the way. Closed above that on November 22nd on Friday. The actual close was 111.85. Now, volume-wise on Friday, only 28 million shares, taking out 30 million shares. So, light volume, but not that big of a deal out here. You also had a little key reversal session here on November the 18th. So the IWM, which had been showing weakness out here, it actually, by closing above those resistance areas, is communicating a strong message that no matter what, you just simply can't push it further, down. It just doesn't want. It wants higher price, not lower price out here, as it is broken above the areas of resistance out there. Now let's take a look at the, what did I want to take a look at? Was gold and silver. There we go. So let's go take a look at Goldilocks and silver. Gold, an important reason because both gold and silver now have come down and tested the swing points. We've been waiting for the test of the swing points. The key is going to be where does it close today? That swing point being the June 28th level. June 28th, the top of which is 1234.80, 261,000 contracts there. So 1234.80. We can see that the test took place here this morning. Got down to 1225.70. You're trading at 1240 right now. Volume-wise, 117,000 contracts. So it is testing it on lighter volume out there. If you get it closed today above the June 28th high, you'll have a rejection on price. Question is, from a volume standpoint, if it's less than 261, you'll have a rejection of price and volume at an important swing point. Now, here you've got two competing patterns. I'm not saying go. I'm not saying buy gold. I'm certainly not saying that because you've got two competing patterns here. And the one competing pattern is the confirmed A to B equals CD down. That's when we saw gold close below the October 15th swing point and do it with volume. That had 110,000 contracts, closed below it on the November 20th session out there. So your confirmed A to B equals CD says about 1178 out here. You would really need to see a reversal signal today inside. So what you'd want to see are really three things. You'd want to see a rejection of the swing point low, a rejection on both on price and on volume, those two elements. And then you'd like to see a reversal candle today. And it could most certainly do that. You could see a bullish engulfing candle, I suppose, that could form out here. You'd want to see it get above the high, at least, of November 21st, in my opinion, and that area is 1250 out there. Then maybe you have some kind of a bounce that goes on that takes you up to the top of this descending price channel line out here. And as far as price levels, where that would likely take you to, I would say that would likely take you to about the 1309-ish range. When we get back, we'll go take a look at silver. We'll take a look at natural gas as well. That was trading up into a resistance area. So far, it looks like a pretty strong area of resistance. It's descending price channel. 877-927-6648. Dow is up 28 points. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 21 points right now. S&P flat. NASDAQ is down a point. Russell is down a point out here. New York Stock Exchange down about 15 points as we speak. So let's go check in on silver. Silver's up 7 pennies this morning. Now, silver here has tested the swing point as well. Silver's done a couple of different things out here. Let's do this. Let's take a look at the swing point low. Let's draw a line across. That's going to be using the session here from June 28th, the high of which is $19.63. Let's put a red line across there. So, again, let's I don't have the right volume here on this day. I'd have to go over to the contract. I'm going to switch contracts, but I know that it had high volume on that June 28th trading session out here. So we can see we've had a test of that swing point. We also do have it now, so we get the same two competing patterns out here. The A to B equals CD down, and so the A to B equals CD down takes you into that swing point from June 28th down around 1846 out here. So we've seen a rejection of the price at this stage. I'm assuming we're seeing a rejection of volume, but you don't have any kind of reversal signal inside of silver. Now, silver would actually have a bounce that would, no, I take that back. Silver's bounce would also be, I might have to redraw my lines on the other chart that I was using at 9 o'clock this morning. If we take a look at where silver's bounce could take you into probably around the $21-ish range out here. You know, it's got resistance at the top of this descending price channel. We've seen a break of it. We saw a little bit of a false breakout here during the time period end of October inside of silver. So far, this is not a buy. I'm saying it's not a buy in silver or gold out here yet. All that it's doing, it's moving down into the swing point, and if silver closes inside the June 28th swing point, same thing with gold. If it closes inside there, which is in the case of silver, it's $19.63. It's trading at $19.19 right now. It will go complete at least the 1-to-1 A to B equals CD at 1846. More likely move down into the 1 to 1.272 A to B equals CD down. That would take it to about the $17 and change mark out there. So that's what's going on inside gold and silver. I mentioned natural gas. Now, natural gas here, came off of this bottom nicely. That was on November the 5th. I was waiting for a little bit lower price. Never gave us the actual 1.272 butterfly pattern. It was close. No cigar, but it did form. Nonetheless, it did. Golly. I just let me redraw this pattern out here. Here is your butterfly pattern. It did make, I was looking for it to get down. I can't even draw it all the way down there. But did make it down to the level that I wanted. Nonetheless, it has bounced nicely, and it's bounced where it's supposed to, which it has run right into the resistance of this descending price channel. This is the January contract. We're looking at $3.84 right now, and we'll see if this area here is going to hold. It's important because if this breaks out above this descending price channel out here, that would be very bullish for natural gas. Otherwise, what you would expect is some type of retracement. That retracement here, if you go from the low to the high, the first retracement level is going to take you to about 373. Next retracement level will take you to about 362 out there in the marketplace for natural gas. If we take a look at bonds here, let's go see what bonds are doing at the moment. Bonds moving a bit higher, so you get the market moving a bit higher. You get bonds moving a bit higher as well. Still an A to B equals CD down is in play here. What bonds will need to do in order to confirm any kind of a move higher here is going to have to be to take out this session from November the 20th. That means a close above 132. What is it? 132.25 out here on the continuous contract. Let's go check in on coffee. I haven't looked at that for a while. So coffee last week, let's see, is that the, this is the monthly chart. So this is the monthly chart. Now the monthly chart is testing out this hammer candle that takes you all the way back to December of 2008. So that is, so far that hammer candle is holding. That's what the monthly shows. Let me see if I've got a weekly chart out here as well. See what it actually did last week. Excuse me. I've got the daily chart. I suppose we could just change the time frame of this. So let's just change this to a weekly. See if I have. So on the weekly chart now takes you back quite a ways. I imagine this is going to take us back into the 2006 time frame. So the 2006 time frame, that level was rejected the week of November 8th. It was rejected last week as well. Not exactly any kind of big sign of strength off the bottom here on the weekly. Let's go see if there was on the daily chart, though. Time, send it off to daily, see if there was a sign of strength with the hammer candle now having been tested. And you got a sign of strength from a candlestick standpoint. No real sign of strength from a volume standpoint off of the lows. But you did gap up. What coffee did do is it did gap up on the trading session between November 15th and November 18th. Looks like today it's come back and it's tested and it's closed that gap. 106.40, the high of the November 15th session. The low so far today, 106.15. So it has tested that area. It has rejected that. Maybe coffee this time around is off of the bottom out there. I had a question to take a look at Lionsgate to see if Lionsgate is a short. So the ticker symbol on this, let me go over to a different tab here. LGF is the ticker symbol. Then we'll go take a look at Boeing and Caterpillar out here inside of the Dow, because we got Caterpillar bouncing and Boeing moving down into a little sign of strength out here. So LGF. Then we'll go take a look at those two equities. Lionsgate here this morning, pulling back with some volume. Let's take a look and see what this is doing out here. So Lionsgate has got some, let me put this on a weekly chart first. So let me see where the volume is on the weekly chart. Whoosh, all the way down here. That's a nasty looking thing, isn't it? If you're watching us on Tiger TV, folks, Lionsgate's got a high volume bar at about $16. It's trading at $31 as we speak here right now. Let's take a look at last week's. I want to put a monthly chart up. Give me a moment here to do that. monthly chart has that same high volume bar at $16.19 out here. Now let's go take a look at the daily chart, see what kind of patterns we have completing out here. So you've got a downtrend channel for sure that it is now established. If we take a look at that, see if we can draw this in here, I would say there's your downtrend channel inside of Lionsgate. Let me try to figure out the bottom, see if the bottom of this channel is right about. Let's see. So if we come all the way here, we have 3 co-located opens and closes. You've got 1, 2, 3. So I'd say that is, let's change that to a red color here. So inside Lionsgate, the question is that a short? And here's what I would say if you're looking to play this to the short side. Let price bounce right up into the top of this descending price channel. That would be an area that I would be paying attention to. Now, you've got some support out here. You should have some support right around the $28 mark. You've got this little high volume bar out here. You don't have wide price spread, but you do most certainly have some accelerated volume there. And you also got it right here. So here's the area here's the area that's holding as support right now. It is the candle session from May 31st. Now, this did have wide price spread. It didn't end the session as a positiveness, but still, if you take a look at the entire length of the bar out here, this had wide price spread and accelerated volume, and so Lionsgate has come right back into an area of support that is holding out here, and it's doing it on, let's put a line for volume across the bottom of the screen as well. Now, the trading session, I'll go back and give you the exact trading session we're looking at. It is from May 31st. So this did 5.2 million shares to the upside out here. And as it came back and it tested that area, it did it on a little bit lighter volume. It did it with only 3.7 million shares, and it did it on November the 8th. Now, this morning here, it is pulling back with volume. Let's see if there's some news behind Lionsgate. LGF is the ticker symbol. Aren't they the ones that did that movie out there, Hunger Games? Or I don't know if that was Lionsgate or who it was. Let me see if there's any news. Yeah, the Hunger Games. Yeah, Hunger Games. So I thought the Hunger Games was out this week or last week or something. It's not a movie that I have seen. I don't even, I only know it's about killing people or what have you. So it doesn't usually send me out. That doesn't usually attract me to a movie out there. In any event, it is pulling back here this morning, so let's just take a look at what the stock chart is telling us. Volume this morning are 4.3 million shares, so it's going to have the volume coming into this May 31st level, but you want to see price at least close inside this area. But here's the descending price channel. If you wanted to go ahead and take a short in this, my suggestion would be to attack it from the upside of this out here. The top of this rising price channel. What you want to do, folks, you may not have the same type of parallel line tool, although most charting applications do have a parallel line tool. Just simply take the actual open from the October 21st candle. That open was at $37.63. Use as the next touch point for your channel line. Use the open of November 15th. And that open was at $34.54, and then you can use as the close, Friday's close, November 22nd, out at $33.76. That cements a pretty good descending price channel. If you see price close above that area, that would be telling you, okay, now it's ready to resume its price move to the upside. Potentially, it would be breaking out of the descending price channel out here. That is on Lionsgate. So that's my best call for. Apologize, I don't recall who asked in the den. It might have been Peak D asked about Lionsgate out there. Right now, the Dow is up 40 points. The S&P is up 1. The composite is up 2. Let's go check in on a couple of these Dow stocks out here. Let's first check in on Boeing. BA is the ticker symbol. Now, Boeing here formed an island reversal top formation at its all-time highs. If we pull this back here, it's at its all-time highs. Now, this in essence, should be an extremely bearish candle formation. Doesn't get too much more bearish. I don't know if that's really very good grammar out there. Too much more, but you know what I mean by that, right? So it doesn't get much more bearish. I think that's more accurate. Doesn't get any more bearish. How about that? I guess we've got a number of them. Doesn't get any more bearish than a island top reversal at its all-time highs out here. Now, why is that important? Well, when you take a look at the Dow, let me see if I can figure out where Boeing is at. I can't. I don't have it on my screen. I don't know what weighting structure Boeing is in. Well, we're not going to worry about what weighting structure it's in. just simply with regard to messages inside of the Dow. If this pattern gets taken out, and to get taken out, in order to rescue these passengers here inside of Boeing, it's only 2 days worth of passengers, which are November the 18th and November the 19th. Now, the reason why I say that is because that's where the island was formed. You had a gap up from the November 15th candle session. The high was 136.08. The very next session, the high was, or the low was 137.7. That created a gap. But it also created a gap in between the November 15th candle and the November 19th candle, which low is 136.70. Then on November 20th, it gaps down. It creates a little bit of an island, a void of space out here. Now, here's the problem. Created that bearish candle out there, candle formation. It had a high, a round number high, right? 142 out there. We know how important that is. Basil's taught us the importance of round number highs inside of the marketplace. But when it came down, with the volume pattern that we saw on November 20th, was only 8.6 million shares. This thing broke out with 10.7 million shares on the trading session of October 23rd. Now, that has not been tested. Today's session so far, it's pushing lower, but light volume. Let's see, we've been trading for a little over an hour, about 2.8 million shares out there. Not light volume necessarily, but it doesn't look like it's going to have the volume to bust through October 23rd. Now, Boeing, didn't they warn, was it Boeing that warned this morning about some engine de-icing or what have you, issues that they've got with some engines, and it means that at certain altitude levels, don't be flying through rain? That's a scary thing, isn't it, folks? But still, the stock is not behaving too badly out here. So what you want to be paying attention to, the real meaning behind this is that this is a very bearish pattern. If we see it close back inside that island, back above 136.70 out there, that'll just tell you how much energy is actually inside of the marketplace, because you will have had a significant reversal pattern and it will not have held inside of the market. So that is on Boeing out there. I want to switch over. I'm going to go ahead and actually take a long position here inside of the SPY right now. So give me a moment here, inside the S&P, the ES Mini. So give me a minute here to do that while I'm on the air. I just got to switch over to another tab, hit a few buttons, and okay, good. Okay, so I'm all set, and I can reset this thing in a minute and 33 seconds out there. Now let's go take a look at Caterpillar. As we take a look at Caterpillar, the reason why I went long is I got a signal here on one of my other systems to say go ahead and take a long position, and so I just simply do that without reservation. I'll go back in and adjust the stops, and we'll see how it all plays out. But if we take a look at Caterpillar here this morning, we've got Caterpillar gapping up. Now, Caterpillar's really, this is probably the most bearish of all of the stocks inside of the Dow. And you can take a look at it here. You know, if you go back to the February timeframe of 2012, well off of its highs out here. Now, to a certain extent, it's been consolidating sideways from a low of maybe about $80 to a high of somewhere around 89 or so, 90. So we'll call it about a 10-point consolidation inside of Caterpillar. This thing gapped down recently on October 23rd, did it with 9 million shares out here. This morning, it has gapped up with 3.2 million shares. Nothing here overly excites me about the Caterpillar. About Caterpillar at this stage, breaking out of this consolidation, just like we took a look at Boeing and it potentially closing its island reversal. Hey, getting back above this consolidation level, above $90, would say, something to think about. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 36 points right now. It's leading the charge, the upside this morning. The other markets are flat out here. The S&P is flat. It's up 90 cents. The Composite is up $2, so that is flat. The Russell 2000 is up 19 cents out here. It also is flat. Let's check in on the daily charts here for the different indexes out there. We've got the Dow. The Dow is really up above any kind of resistance on a daily chart out here, so it wants higher price. It's in the very strong bullish mode out here. It really has been ever since the low that was put in on October the 9th. Gave a nice little buy signal out here on October 10th. We have seen, this has been a market that's been consolidating sideways. We saw a couple of cautionary signs out here, but those cautionary signs were just simply overcome by buying pressure inside of the market. So that's on the Dow Jones Industrials. If we take a look at the transports out here, just stay with inside here. This, too, is in the strong bullish momentum mode. Now, it does have this little dark cloud cover candle that formed on November 8th, so it does have a bit of resistance. The high of that resistance is 72.45.43, so that's going to be an important number to be paying attention to, 72.45.43. It gets above that, you'll have the transports joining along with the Dow Jones Industrials average out there. We take a look at the NDX itself. Take a look at this. This is really still in it's in the caution sign on the daily chart out here. It's trying to get above its evening star reversal pattern. That is on the trading session of November the 18th. The key number to be paying attention to is 34.25 34.2920. 34.2920. You're at 34.2641. If it gets above that today, tomorrow, whenever it does, it will have taken out its only area of resistance out here. Still looks bullish, not bearish to me. We got the little bit of a cautionary sign. That just simply means tighten your stops, but not. This is not a sell mode inside of the NDX. And, of course, if I switch over to the daily chart, we're on the daily chart. If I switch over and take a look at the weekly chart here, the weekly chart says, hey, this is a strong bullish mode that the NDX 100 is in. So you just got to keep an eye on different time frames out here, but the weekly is not showing any weakness whatsoever. Did form a doji candle, hanging man candle. It's really more the doji that's important here. Close above that doji, that just tells you that there's no resistance inside of the NDX 100. If we take a look at the Russell 2000, let's go, here's the weekly chart. The weekly chart, it's up and over above its evening star resistance level. That was the candle session. The high here is going to be from the week of November 1st, and that high being 1123.30 out here. Let's take a look at the daily chart for the Russell 2000. Our daily chart has slipped back into the strong bullish mode out here. And as long as it stays above its bearish engulfing candle, this is from the actual 1030 session. That's at 1123.30 area. That is in a strong bullish mode to the upside. So what are we paying attention to today? Well, we're paying attention to the VIX index, I suppose, is one that we can look at as long as that stays below the 50-day exponential moving average, which is, by the way, $13.84. You've got the VIX at 1267. That is just clear sailing for the bulls out here. A quick peek in on those currency pairs. One of the ones that we were paying attention to was the euro-U.S. dollar. We had noted the pullback. We had noted the price relative strength divergent pattern out here. Now, coming in for the next 2 minutes, if we do get a close above 135.02 out here, and it looks like we will get that close. What you want to see here in order for this to suggest higher price now in the euro-U.S. dollar, is you want to see a close higher than this session candle that we're coming into here at the 11 o'clock time frame. Folks, have a great Monday. I'll look forward to seeing you as soon as I humanly possibly can. Have a great day, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.